Hello everyone, Petar here from vicanalysis.com. I want to post the update on my positions. Pretty good progress on the USD and British pound. I also established one new transaction on Euro New Zealand dollar, which I will show you a little bit later. So far I want to post about the USD and how this setup worked well, and as you can see here, this is my entry. I took two positions, 0.5 risk. First one I closed like short-term oriented, something like intraday, so I catch like 140 pips here. Risk was about, I think about 55-60 pips, so almost 1-3 ratio. So I took a 1.5% here with 0.5 risk, and this is very good. So I scale here near the Fibonacci expansion 100% from this ABC. So this is expansion here. I want to scale one position here and try the second one near where we started this massive upward movement back in the day when the drug didn't expand the Q program, just extended the length. And this is reaction of that. So since again the key what drives the market is actually fundamentals, and what you see on the chart, technical chart, is actually represent a presentation of that fundamental force which actually drives the market. Reading the fundamental analysis and intermarket analysis in relation, you can it's the actually best thing you can do when you analyze where you want to establish positions on which pair. You always want to establish positions on the strongest currency versus the weakest currency. So you don't want to trade at two strong currencies or two weak currencies, because on that way you can go in many traps and lose money. Again, fundamentally, if we speak about the fundamental aspect, euro is again in QE program, and it will be till I think March 2017. If they don't extend this year even more, depend how the economy in Eurozone will recover and how fast will recover. So we have the one fundamental trend which is actually versus the euro dollar, and then we have strong technical view also for the downward, and we have the massive buying climax from this stage here. We have ending diagonal here, broken, tested the starting of the this diagonal, which is, you know, usually price tend to test that and then try to recover, but we saw here that there is no power to recover, and we broke this. Let's say I call this the holiday trend line, since it was on when the banks were in holiday. So we retested here. As you can see, the MA here very strong. You can see the 200 MA, 150, very strong or downward pressure. I established position here on the retest of this diagonal here, and also that was a 50 and 100 on the same area here, so rejection from that, and I established position here. On the daily time frame, this is a clean downward trend. We are all below the key moving averages, and we are also, you see the 50 how it's heading very strongly low. So we are in very strong downward trend, technically and fundamentally as well. So this is why the euro is the weakest currency right now. Why I'm expecting this? I want to also scale here. I don't want to hold to some large positions to hold, you know, a lot of time. I want to scale as soon as I see some strong support, some key support areas, and scale, and that way bring the account and profit, you know, in the rising curve. So I placed it here near the 161.8, also near this swing low, and that will be, if I catch this can happen even today. If there is enough power, maybe tomorrow, we don't know that. I'm secure here. My stop loss is break even, so right now I'm plus about 140 pips, and I will actually go to take 300 pips. The risk was about 50 pips, so I want to catch the 1 to 5 risk reward ratio, 1 to 6. That will be amazing if I can catch the 2.5% gain risking 0.5. This is the field professional trading, and this is the thing I'm teaching in my mentorship program. And you know, I'm telling you, don't lose time with, you know, with trying to find a holy great technical indicator or something like that. First of all, you need a good quality of education. You need to understand the fundamental aspect, to understand the intermarket relation, to watch the other markets and how other markets reflects like futures indexes, you know, stock markets, bonds, and you know, everything is together make you the better trader in you know, to understand better what's going on the chart. Technical analysis is also very important, because if you don't use technical analysis, you don't know where to time enter and how to benefit from the fundamental view. So the technical analysis in professional world is using to time entry and to benefit from the fundamental view. So without the technical analysis, you cannot do that. And fundamental and technical, they're both important. 50% it's technical, 50 is fundamental, and together this is what makes actually the professional trader, if you compare to the average retail trader. Since the average retail trader, we tend to use only technical things, that everything is technical, but he don't even have a clue about that everything is actually driven by the fundamental, and the reflection of fundamental is on the technical. But actually what's driving the market is always fundamental. You must understand that. So technically you only need to find the best time to enter, to establish position and catch the part of cake, let's say. So again, for all that, I teach you on my mentorship program, 7-day course. We work like 4 or 5 hours per day. I teach you the intermarket analysis together with full technical analysis, what you need to focus mostly about the volume analysis, analyzing the supply demand zones, volume analysis, and of course the classic patterns, which are used many years successfully by veteran traders and professional traders. So this is about the euro, pretty much very good. Close the 1-3 risk reward ratio here, 1.5%. You can also watch this on the Forex Factory thread. There is I opened the demo account in purpose to show you. You know, I started in December last year to show you how much I will earn also in this year, and that you will see a very low drawdown and very quality returns, which is actually key part in any trading, to have the stable, very low drawdown and very enough profit over the years, over the larger period. So that's it about the euro. Let's go jump to the British pound USD, which I also have one position here. I established it around this stage here. I'm right now in the plus about 70 pips. What I'm waiting here is actually the swing low. It's a key swing low where we started this run of about 1,300 pips. I don't see any larger support before that, so this is my support. This is where the area where I want to scale out my position and try to take 1-3 ratio from this setup. This will be also potential 1.5 earn, also risking 0.5 from account. The reason again is for establishing this position is pretty much a classic redistribution by Wyckoff. Strong increasing volume confirmed actually that this distribution is valid, and it's a classic, you can call it a bearish flag. This is also redistribution by Wyckoff, and this is a classic retest. The MA's positions pretty much very low, the key MA's strong downward, and as you can see, look at the daily time frame, very below all averages. There is a big head and shoulders formation on the daily time frame in the background here. Weekly time frame very low, so you see it's clean low. And if the United Kingdom continue with bad datas, with bad if they don't progress very good in the next months, this can really drop, and pound can easily hit this swing low, and it can drop about 1,000 pips in next months if there is a series of the bad datas from United Kingdom. So, but we're going step by step. First of all, swing low should be on the test, and then later on we have the swing low on the monthly. This is a 1.4200 area, which will be the strong support later on, and then finally this key monthly support and let's say 3 500. So that's about the pound pretty much, because the bad data's, you know, technically it's also very bearish, fundamentally it's very bearish. So pretty much the euro and pound are very weak currencies, since technically and fundamentally they're very weak, and that is the power, you know, when you have the fundamental and technical view together. For the end, this is my new position. I actually established it on the Euro New Zealand dollar. If you follow my work, I also do the regular updates on the InstaForex. I'm official analyst of InstaForex company, the brokerage house, the largest Asia brokerage house, and pretty much I post also there. If you follow my work, I'm bearish on the Euro New Zealand dollar. Again, pretty much I position here the strong rejection from 200 MA on the 4-hour time frame. Bring me the very good potential entry, and I sold with 0.5 risk. We'll try to take 1-3 ratio. Actually trying to catch the 61.8 from major 61.8 from this swing low, this swing high with some major 61.8. And also there is a demand from this stage here, some mini cluster here, or actually some reaccumulation from this period here. So I want to try to take that 1-3 ratio. Of course, I must secure near this key support. So if the price go like 160-50 pips, I will secure my position. This position, basically my risk is around this stage, because this is enough. If this is a qualitative setup, this shouldn't go here at this stage here, because we already did expansion of 161.8 in this corrective. So I think this is a maximum of the correction. So the stop loss I use like 80 pips in this example. Again, strong head and shoulder formation on the 4-hour, on the daily, and we broke the neckline. We went lower, you know, we tested swing low. We're back here to 200 MA, also to some 61.8 and 38.2 major Fibonacci retracement from this swing high to this swing low. So I started to establish my positions here. Again, euro is very weak fundamentally. New Zealand from the other side, it's also not too strong, but since they cut the rate, but that cut rate we saw it's not enough actually to bring the New Zealand weaker. So you know, New Zealand wants the government wants the New Zealand weaker, but again the cut rate of 25 points is not enough on that already one of the highest rate interest rates from all countries that New Zealand right now have. So it's still not enough. It should be a larger cut, and should be a series of the cuts to actually improve in the next period, to actually you know, to bring the actually weak New Zealand. Since the New Zealand economy is doing good, you know, it's quite okay. The last auction price was increasing, I think by 2.2 or 2.3, the milk prices and so on auction. So it's pretty much okay compared to the euro. You know, it's still I expect New Zealand stronger. So that's it for this analysis. I hope you enjoyed, guys, and feel free to subscribe my YouTube channel. Also feel free to comment, like video, go on the Forex Factory, post the comments there, or your opinions, of course, and together of course, if you want to learn my method again, this is the best deal for you. I will teach you completely everything I use and how I build and work, you know, on the professional way, how you look, and how to benefit not just from Forex. Forex is my main market, but again, I'm trading pretty much all markets, stock as well, futures, and so on. So that's it for this analysis. Hope you enjoyed, and see you soon.